Hi, today I'm going to discuss who pays for closing costs when selling a home by owner. Stay tuned because at the end of the video, I'll share a list of tips and tricks when selling a home. You won't want to miss it. I'm Kristin Stampini with StampTV, and thanks for tuning in to my channel. Let's get started. When you get a mortgage, there are closing costs involved. On average, closing costs run between 2 to 5% of the actual purchase price. However, the buyer is not the only party that must pay fees at closing. Sellers must pay for both the real estate agents and the buyer's agent commission. That's typical. 6% of the sales price, let's say. And it just depends. Rolling closing costs into the loan, usually you cannot roll your closing costs into the loan except in the case of USDA loans. Mortgage loans have a maximum allowable loan-to-value ratio, or we call it LTV. Your loan plus closing costs minus the down payment cannot exceed the LTV limit. For example, an FHA loan has a maximum LTV ratio of 96.5%. You are not able to get a FHA loan for more than 96.5% of the sales price. FHA requires a 3.5% down payment, bringing the LTV to the maximum limit. You cannot roll the closing costs into the loan. The same applies for all other types of mortgage loans except for the USDA loans. You can roll closing costs into the USDA loan as long as the property appraises for more than the sales price. It really depends on your market. Paying commissions to the real estate agent, closing costs for the seller, come in the form of real estate commissions paid at the end of the transaction. When you hire a realtor and put your home up for sale, you agree to pay a commission. A lot of the times that might be 6%, which is typical to pay the buyer's agent and the listing agent, a standard fee. But you can be more or less depending on where you live and depending on what the real estate agent does for you. Some real estate agents and brokers may negotiate and charge less or more than that, depending on how much money they're spending on market and what they're doing to get your home sold. It's not all the same. Most agents will work, depending if you are a for sale by owner, they might work with 3%. So sellers can pay the buyer's closing costs. Getting a seller to agree to pay your closing costs is sometimes tougher than others, especially depending on your market. When you consider that they are already paying sometimes 6% of the price in commission, they will not be happy sometimes at paying closing costs. It just really depends on the situation of the seller. Negotiating for the seller to pay closing costs is to offer to purchase the home for a higher amount. And if they agree to pay a certain amount of your closing costs, it really depends on the situation. As an example, let's say you're going to make an offer on a home at $200,000 and you can offer $206,000 with 6% in seller contributions. You can use to pay for closing costs or other things. The extra $6,000 price amount to a couple bucks increase in your payment, but significantly lowers the amount you need to bring to closing. Does have to appraise at that amount, and any seller contributions need to be stated in the purchase agreement by law. The amount of the seller paid closing costs you're allowed to use varies depending on the typical mortgage loan. So the maximum allowable seller paid closing costs by the loan type with FHA loans is 6%, VAs is 4%, and USDA is 6%. 203OK loans, 6%, and conventional loans, 3%. It really depends and it changes. Sellers can pay for upfront FHA, VA, and USDA fees. Most government-backed home loans have an upfront fee. Seller contributions can be used for the upfront fee. FHA loans and FHA mortgage requires an upfront mortgage insurance premium of 1.75%. Sometimes that changes. The seller can pay the entire amount If seller contributions are not enough to pay 100% of the upfront fee, they cannot cover any part of it. Just depends, and it does change. VA loans require an upfront funding fee of anywhere between 2.15 and 3.3% of the loan amount. Seller contributions can cover any amount of the funding fee up to 100%. Usually, always want to just know this, and then you want to talk to a lender. The USDA guarantee loan require a guarantee fee of 2% of the loan amount to be paid up front. Seller contributions can cover these costs. How to get lower closing costs? Closing costs vary based on several factors. The lender you use, the price of the home, the type of the loan you get, even your credit score can affect the amount of closing costs you're going to have. Your credit score, increasing your credit score, get a copy of your credit report. You can dispute any errors with the credit bureaus yourself. If you have a high credit score balances, pay them down possibly, but always make sure to talk to your lender. Below 15 to 25% is usually the maximum that they want to see. So compare loan offers. And when you apply for a home loan, your loan officer would give you a loan estimate that clearly breaks down various fees, interest, and closing costs. So speak to a couple different lenders to see what options they have and what is a better option for you. I hope you learned a few things today, and thanks again for tuning into my channel. I hope you liked the video. Don't forget to hit the thumbs up, leave a comment, and subscribe to my channel. Also, click the bell icon so you'll receive instant notifications of new episodes every single Tuesday. If you would like a list of tips when selling a home, please leave a comment below, and I'd be happy to share that with you. Thanks again, and thanks for tuning into StampTV. Bye.